Welcome into This Week in Bitcoin, episode 86. My name is Chris, chrislas.com and jupiterbroadcasting.com. It seems the Bitcoiners, they're all out of holiday cheer this year. I don't think I have ever seen sentiment this bad, maybe not even during FTX, maybe going all the way back to Mt. Gox. I was surprised, really. I mean, you always kind of see an uptick in negative sentiment when we're down from all-time highs, but even notes coming into the show, there's concerns about price suppression or price manipulation. And you know what? I started looking into it, and maybe there is some merit to these claims. Probably not what you're expecting, but something that is at least worth talking about.
Fox Business Alert, take a look at Bitcoin. Just a second ago, it was down 5.25%. Right now, down 4.97% to under $86,000. It's at $85,858. It's kind of been a brutal 24-hour crypto freefall, dragging nearly all crypto stocks into a bit of a winter abyss here. In particular, the so-called Bitcoin hoarder company Strategy. Strategy's at the very bottom of the NASDAQ. Shares are down 8.5% right now. Bitcoin at the moment is leading the pack for liquidations. In the past 24 hours, investors who own that particular crypto have sold positions to the tune of $205 million. But guess who sees...
Liquidations is kind of the name of the game. What's become clear this year is the big wallets, they run the show. Us retailers, we can stack and, we probably set some sort of base floor price, but it's institutions, it's even nation states now that are really moving the price. And here's a lens which you could view this with. Since the iShares Bitcoin ETF, BlackRock's IBIT ETF began trading, all the net gains have occurred after trading hours here in the States. Talk about driving the market. So if you just bought the close and you sold the next open on IBIT, and you did that throughout the year, you would be up 222% right now. If you did the opposite, if you bought the open and sold the close, you would be down 40.5% right now. So if you buy the close and sell the next open, you're up 222%. If you buy the open and sell the next close, you're down over 40%. The price action, the positive price action, all happens outside of regular trading hours for the ETF. And like I mentioned recently, there's also been this 10 a.m. sell-off almost every single day. Some people think it's Wintermute, others think maybe it's China selling off some of their stock. But for example, on December 12th, after the 10 a.m. sell, Bitcoin dropped $2,000 in price in 35 minutes and wiped out $40 billion in market cap in 35 minutes. And at that time, it triggered a liquidation of $132 million worth of longs. Now, we're going to get a theme here. On December 15th, the 10 a.m. sale happened, and Bitcoin dumped, again, $3,200 this time, a little bit more, and went from $89,000 to $86,000 and liquidated $203 million worth of longs. Are you sensing a theme here? And all of that action, $203 million worth of longs, wiped out in 60 minutes. There was no negative news at that time I was watching. There was not even any stupid FUD. And then today, as I was prepping the show, Bitcoin shot up 3% in 20 minutes, chilled there for about a half hour, and then went straight down 3% in 20 minutes. And you can see it in the price chart, these big buys that shoot the price way up, and then it holds there, some longs build, and then they shoot the price way down. So we do know this. We brought in Wall Street, and they're playing Wall Street games, but we don't have any Wall Street rules. Eventually they're going to get screwed, right? It's a finite asset, and it's really the people that are trading with leverage. They're going to get screwed. And I suspect the market makers that work for organizations like BlackRock, they are trying to push these leverage traders out of the market, punish them out of the market. At 8 a.m. Pacific today, check this out. So I've been looking into this. I don't normally follow this, but you guys asked. At 8 a.m. Pacific today, Wintermute, Binance, BlackRock, and Coinbase all made big buys around the same time, a cluster set of buys. The price shot up from $87,000 to $90,000 in 20 minutes this morning. Some longs built. People started to get a little bit bullish. Oh, it's a turnaround, everybody thought. So they started hedging that the price was going to go up. And then all four, Wintermute, Binance, BlackRock, Coinbase, they all sold. Again, cluster sells all around the same time, immediately liquidating the longs once again. And this is twice. That can happen in one day when the liquidity is particularly thin, like it usually is in mid-December. So you have these cluster sells from these big players like Wintermute, who's a market maker, or Binance. Then they'll trigger a big set of sells. So that in this case, they triggered $132 million long liquidations. They liquidated $132 million again. That's 4 sales for people that are over-leveraged, people that were making bullish bets that the price was going to go up. They had to force sell. It's above my pay grade here, but it seems like they're hunting around for low liquidity moments in the market, and sometimes there's multiple moments within a day, and they're taking their shots. Now, is that manipulation? No, actually, it's not really. I mean, I think technically it's traders doing trader things, right? They're buying and selling, but they're buying and selling with large bags. And the degens are getting wiped out. The people that are buying Bitcoin or making bets either way using leverages, using loans, they're getting just slammed. And it seems like the pain is going to continue until their behavior improves. It, to me, reads like they're trying to incentivize the market to stop some of this degen behavior, dial it back a little bit. And I'll explain why I think that in a minute. But it doesn't have to be like this. Brian Armstrong, the CEO of Coinbase, he's been going to D.C. on the regular, trying to apply pressure to the Congress critters to pass a market structure bill which would tame some of this. And this is Brian. He's out on the Hill 1 month ago.
Hey, Melissa and Brian, thank you so much for being here with us. You know, before today, you had Chairman Tim Scott said, hey, Democrats need to give a date to mark up this market structure bill. He said the same after your meeting. Democrats, though, are still saying they need a bipartisan draft to move forward. Did anything change after today?
Yeah, well, we had great meetings with the Democrats in the Senate and on the Republican side today. And the good news is that there's strong bipartisan support and will to get this market structure legislation done.
All right, we got good bipartisan support, he says, 1 month ago, so things going really swimmingly. And like I said, he really has been going out there. He got himself a nice set of specs, a great new suit, and he has been out there almost day after day trying to get this thing passed. This is Brian Armstrong, CEO of Coinbase, just 2 days ago.
Hey everyone, Brian Armstrong, Coinbase CEO here. I'm in the halls of Congress, back again, pushing for market structure legislation. We've seen a lot of progress since I was last here. We've now seen draft text shared by the Senate Ad Committee. Senate Banking is also working nights and weekends to get the next iteration of their text out.
Lots of progress, working nights and weekends. What could possibly go wrong? Now, Bitcoiners, you should care about this for one simple reason. We're still early. And that next wave of normies, those non-risk taker normies, they're people who are interested perhaps in a savings technology outside the dollar, but they don't really trust anybody outside their institutions. And sometimes it's because they have huge bags. Sometimes it's just because they're traditional. Whatever it is, that's their preference. And they're waiting for these institutions to take away some of the scary edges and build Bitcoin into financial products that can be easily sold to them. And we don't get that next wave of customer without some rules of the road that these folks need to follow. That's just how they operate. If they don't know what the rules are, they're not going to go all in. They're not going to take some of the risk. What we see right now with Bitcoin is the early adopters, which has been incredible. But this week, the Senate Banking Committee confirmed that Bitcoin and the crypto market structure bill will not advance in 2025. Sorry, Brian. Womp, womp. Turns out, I guess there just wasn't the juice. Armstrong couldn't move the needle.
Next, we're learning key crypto legislation just got pushed to next year. Crypto market structure legislation is expected to be marked up in early 2026. That's according to the Senate Banking Committee, with a spokesperson saying Committee Chair Tim Scott and the committee have made strong progress with Democrats on bipartisan digital asset market structure legislation. The industry, lawmakers, and many crypto world guests throughout the year were hopeful a market structure bill would become law in 2025 to go along with the Genius Act Stablecoin Act, which President Trump signed into law over the summer. Of course,
I think you get the idea. It seems like Armstrong just couldn't get it over the line. Now, I don't have all of the details here, but following different Congress critters on social media, the rumor and hubbub is that Senator Warren threw a wrench into things. I don't know if this is true or not, but it appears that they had a BSA surveillance clause that they wanted to add to the bill, which the Congress critter I was following called unconstitutional. And they said that it would treat software developers much like financial institutions, which would be an unbearable burden on them. And so they essentially were trying to negotiate a non-negotiable position. And that has stalled things out. Now, this is notable because 14 days ago, BlackRock CEO Larry Fink was on the DealBook stage. And, he goes into his typical Bitcoin pitch, which I have played for you guys before. So at this point, I don't even bother clipping it for the show. But I listened back again, and I kept listening a little bit further, and I realized that Larry said the quiet part out loud.
I think we need to get back to what is the purpose. What is the purpose of Bitcoin? Then we get into stablecoin. The $13.5 trillion that BlackRock managed on behalf of our clients, it's basically managing hope. That's all it is. I mean, why would anybody invest in a 30-year outcome unless you're hopeful in 30 years you have the compounding effect? Bitcoin is an asset of fear. And when you're less fearful, like we had a trade agreement with China, you saw a shift downward. There is conversations this week that there may be some type of settlement in Ukraine. Bitcoin fell.
This is such a stupid premise. I mean, I don't mean to be just so blunt about it, but it's a sales pitch that he has come up with that he can use on a stage like this in front of financial wonks and maintain his credibility after all of the things he has said for the last decade about Bitcoin. But the idea that it's hope or fear it's silly.
A little bit. So you own Bitcoin because you're frightened of your physical security. You own it because you're frightened of your financial security. The long-term fundamental reason you own it because of the debasement of financial assets because of...
What he's really saying, but he doesn't have the sack to say it, is you might hold Bitcoin because you're convinced that your government is falling apart. They're debasing the currency. Basic civil safety is deteriorating and the conditions are getting worse and worse. And so if you're hedging against your government, you might buy some Bitcoin. And he said this in other contexts before, because he'll talk about it, how it's a non-sovereign store of value. It's not attached to any particular nation state or any particular debasement situation. Anyways, this isn't the main point of the clip, but if he's going to run his stupid mouth like this, I shouldn't say it's stupid because he's very much intentionally saying it like this. It's a calculated thing, so it's not stupid at all. Meanwhile, Brian Armstrong is sitting next to him with like this look on his face like, I don't co-sign this.
Basement of financial assets because of deficits. And so to me, even the movement in the last week, and we've had a 20-25% drawdown, and this is the third time since IBIT was created, our ETF. And so you see these shifts, and they're actually pretty non-correlated shifts, and so the role...
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90-some-odd thousand.
Sorkin coming in with his classic mid-take of, it's not a store of value because I bought it at $125,000 and then a month later it's at $90,000. And he's saying this to Larry Fink, Mr. Long-Term Investor. Buy assets and hold them. I don't know how Sorkin has this job.
You see these shifts, and they're actually pretty non-correlated shifts, and so the role...
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90-some-odd thousand, you're saying
if you bought it for a trade, it's a very volatile asset. You're going to have to be really good at market timing, which most people aren't. If you're buying it as a hedge against all your hope, then it has a meaningful impact on a portfolio.
If you buy it as a hedge against your hope, which is so stupid, right? Because you could easily twist this around. Well, Bitcoin is hope. Because I'm hopeful that even though everything's going to get debased and the quality of living is going to go down, I'm hopeful I have a way to store my energy today for the future. So I'm hopeful that I'm going to live long enough to enjoy those benefits. So you could make an argument that holding Bitcoin into the future is an inherently hopeful action. It's just dumb. This entire argument is just dumb, but it's a pretense he needs in order to talk like this. But what is actually important is the part he says in just a moment.
Asset, you're going to have to be really good at market timing, which most people aren't. If you're buying it as a hedge against all your hope, then it has a meaningful impact on a portfolio. The other big problem of Bitcoin is it still heavily influenced by leveraged players.
That's what I wanted to talk to you guys.
What? Larry Fink, with all the things on his plate, all of the little details here and there, he's worried about leverage traders in Bitcoin. He says one of its big problems, this is 14 days ago. 14 days ago, he says one of Bitcoin's big problems, and he has a bit of a stake in Bitcoin with IBIT, is the leverage trading.
Heavily influenced by leveraged players.
That's what I want.
So this, I don't think should be ignored. Larry Fink has been talking about this somewhere in the halls of BlackRock, around some board table or whatever it is. They have been talking about leverage traders being an issue in Bitcoin. That's my read on that. And that, to me, should not be ignored. If you want to call it manipulation, I guess, but I think it's people with a stake in the market with large wallets that want to maybe just force some of this degen behavior out. That's my take. What do you think? Is there some sort of market manipulation happening? Is the price being suppressed? Or is there just simply more sellers than buyers? Boost into the show, support the show, and let me know. And this next segment might be a reason, maybe, why people are selling. This is my last planned episode of the year. I mean, that could always change if something crazy happens, but right now, the next episode would be on Christmas Eve, and then the one after that would be New Year's Eve. So I've decided I'm going to just take those 2 episodes off. But then that got me thinking of some of the narratives and stories that have developed over the 2025 year. And when I think of ones that are going to be playing out through 2026, I unfortunately believe that quantum computing as a threat to Bitcoin is going to be a continued FUD narrative through 2026 because it's the perfect Bitcoin FUD. Unlike the energy or ESG narratives, which you could debunk with some quick napkin math, just boom, 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 look at this, look at that, or go to this website, read this thing. You could actually explain away the energy and ESG concerns with practical, reality-based responses. Quantum computing is a technically real thing. Shor's algorithm running on a large-scale, fault-tolerant quantum computer would eventually break ECDSA. That is obvious. It could be maybe at absolute best 5 years, but the timeline's a total fog. It's probably closer to something like 20 years. It may actually never happen. No one knows. I mean, literally, no one knows. So there's just all of this room for debate and argument about the severity of the issue because literally no one has the answer. So it's the perfect thing for the internet to just go sensationalist with. And then the reality is there are some mitigations. Bitcoiners have been looking into this for a while. Bitcoin can upgrade around this. But even the best case scenarios, there may be some consensus heavy events. There may be a scenario where some coins get abandoned. Maybe, depending on what the fix is. So it's like there's not a super easy fix. There are paths to fixes, but there is some noteworthy concern there at some point down the road. I don't think it's a huge concern because everybody involved with Bitcoin is incentivized to solve this problem. And I think you're going to see a lot of other things get attacked before Bitcoin, like the fiat banking system, SSL and things like that. You're going to start seeing the signs this is coming. And so there will be a real urgency when we start to see that stuff. The reality is, this isn't even a fake number. There's probably 100 people total, 100 people on Earth qualified to assess the real quantum trajectories that we seem to be facing. And what we have is a lot of investors that think the next big play after AI is quantum. And so, they spent 20 minutes on ChatGPT. They now think they're a quantum expert, and they're going out there and they're buying quantum stocks, and they're scaring investors about the risks of quantum to pump their bags. This is a real thing that is happening. So you just have total confusion out there, conflicting predictions, confident voices that are saying totally opposite things, and there's no clear way for the average person to actually price this risk. So it's really the perfect Bitcoin FUD. And, Google comes out, they have big quantum progress. And what was the first headlines that started to pop up? Bitcoin's gonna get broke. Bitcoin's going to get cracked. It's too risky. That's the first headlines that come up. And to me, as somebody who's just grown up with technology, who's been around forever in Bitcoin, it's only a threat if Bitcoin were to adapt. That's the entire premise here. The entire quantum risk premise, even though we have all these unknowns, you could just distill it all down to it's only a threat if Bitcoin doesn't adapt. And Bitcoin breaking from quantum isn't the base case. The worst case scenario is not that Bitcoin goes to zero. The worst case scenario is that we do absolutely nothing and roughly around 20% of the supply, which is not floating, becomes liquid. The older addresses. It would be a one-time supply event. It's not a protocol failure. It's not an ongoing attack against Bitcoin. It would be dormant coins going to active. And man, I think you and me would be happy to snap those up. I'd love to buy some Satoshi era coins for cheap. So long term, the worst case scenario around quantum barely matters. The markets absorb the one-off supply shock, and you have a fixed asset. It gets snapped up. It's like this quantum FUD is really, really building. And I'm really disappointed to see macro analyst Luke Groman say that he sold his Bitcoin in large part because of quantum concerns. I cannot express to you the nuclear bomb this set off in the macro analyst community in the last week. Bitcoiners have been shook to their core by this announcement because Luke was considered one of the great macro analysts. And the reasons he sold his Bitcoin are so low IQ, it throws into question all his previous analysis. So I'll go through this with you because this is going to be one of the biggest threats of 2026. And Luke says that one of the reasons he just sold off a huge part of his stack is because he has concerns about quantum computing. Concerns around quantum computing, so he sold off his hard asset.
Very serious people raising the potential that it could be an issue within 2 to 9 years. And the quantum stuff is way over my head. It's way over my pay grade. I try to read it and I feel like the dumbest person alive. And I am not in a position to sit here and have any debate with someone. Is quantum, is it a risk? Is it not?
Make no mistake about it. This is a really weak reason to sell your Bitcoin. Yeah, I don't know. Maybe it is. Maybe it's not. Right? I'll get into it. It's more.
What I am in a position to discuss is I've been in markets 30 years, and I'm watching the way Bitcoin is not making a new high against gold. I'm watching what Tether's doing. I'm watching what these people I respect in the space are saying. And I'm saying, markets are telling me that's serious. And oh, by the way, the OG whales.
So wait, hold on. Let's back this up. So he's selling. He's selling because he's watching charts and he's reading Twitter.
Bitcoin is not making a new high against gold.
So he's looking at Bitcoin not making a new high against gold. Well, first of all, selling Bitcoin based on chart astrology is like a total rookie mistake. This is yikes. You can read charts in two ways. In the show notes, I'll link to some chart readers out there who say the Bitcoin price is about to explode upwards. So basing a trade of a scarce asset on what you see in your settings based on your view in TradingView is a really poor time preference move. But he said something else in there that maybe matters more than just looking at the charts, is he said it didn't make a new high against gold. Well, this is really it. This is part of the crux of it. The whole quantum narrative, the reason why Luke has glommed onto this is because gold doesn't have this problem. And so it's a pro-gold thing to say without even saying gold. And Luke has always been a gold bug. I've noticed this for years. But what I'm surprised that he hasn't put together, being a gold bug, is that when gold has its run, it runs. And gold is still in the process of running. It's slowing down, but it's still running. So why would he expect Bitcoin to run? Because historically, every single time, Bitcoin runs after gold is played out. And then Bitcoin outperforms gold by a large margin. How would Luke not know this? The people he's respecting, that he's watching on social media, they don't know this? They don't know this? You wouldn't expect Bitcoin to outperform gold while gold is still having its rally moment. It's a liquidity play. And the money, the liquidity, is still going to gold. And then usually we have about a 90 to 180-day lag. After that happens, Bitcoin goes on a rally.
I'm watching what Tether's doing. I'm watching what these people I respect in the space are saying. And I'm saying, markets are telling me that's serious. And oh, by the way, the OG whales, most selling in a cycle ever.
Ah, yes. So one of the other signals is the OG whales, one of the most selling ever. Well, of course OG whales are selling. We just hit $100,000 for the first time ever. Bitcoin's never been here before. I'll have more on that in the show later. But Luke's working from old data. Glassnode shows that whales accumulated 269,822 Bitcoin, worth around $23.3 billion in US dollars around the time, in the last 30 days. Whales have made the largest accumulation they've ever made in the last 13 years. In the last week alone, whales, that means wallets with already a bunch of Bitcoin, bought 54,000 Bitcoin in the last 7 days. And Luke, the gold bug, he's clearly discounting the ETF effect that is still ramping up, which I also find crazy because gold went through a very similar process. This is Bitwise's CIO, I believe, or CEO. We'll come back to Luke, but we'll take a quick divergence because this is clearly missing from Luke's analysis.
So first on the why ETF demand accelerate, there are 3 real reasons. First is it always happens. So if you look at any ETF in history, and I was the CEO of ETF.com before I joined Bitwise, so this is like my old turf. Year 1 is typically the smallest year, and then it ramps from there. If you take the gold ETF, it did 3 billion inflows its first year, and then 5 billion, then 7 billion, then 10 billion, then 18 billion. It ramped for 7 straight years. So this is just what happens in ETFs. One of the reasons this happens is a second point, which is big advisory platforms like Morgan Stanley and Merrill Lynch take a long time to turn on exposure to these ETFs. In fact, it's only been within the last 6 months that advisors at Morgan Stanley, Merrill Lynch, UBS, and Wells Fargo, which control north of $10 trillion, could even invest in Bitcoin or Ethereum ETFs. Now, those doors are blown wide open. So we're dealing with another audience. And then the final reason is TradFi is just slow. The average Bitwise investor on the TradFi side allocates after 8 meetings with us. If they started those meetings, yeah.
You have to suffer through 8 meetings with the same person before they give you money?
Suffering. I'm sure it's a pleasure.
Welcome to Crypto Land. But here's the thing. If you started those meetings when the Bitcoin ETF launched, January 2024, and you did them quarterly, guess what? Your 8th meeting was this quarter, right? Like we're just in the sweet spot of adoption. I know that's hard for people to, but we've been doing this at Bitwise for 8 years. So that's like a fair...
I'm so glad you guys have been doing that.
Yeah. 8 years feels like 100. But that is true. So look, I think ETF growth will go up. The comparison to the net new supply is because I'm a very simple person. Like crypto prices are set by supply and demand. You have one source of new supply, which is blockchain rewards or staking, et cetera. And then you have this novel source of incredible demand on ETFs. And if we look into 2026, you can be very precise. At current prices, the Bitcoin network will produce $15.1 billion worth of new Bitcoin. ETFs they'll end up doing about $23 or $24 billion this year in 2025. And we think that will go up in 2026. So they'll far surpass it. Ethereum's an even stronger story.
So they say that both Ethereum and Bitcoin will have more supply bought by the ETFs than will be mined by a large margin. And that the ETF buying may ramp up for 7 years, or for, I guess it'd be another 5.5, 6 years. And a lot of OG whales, I know this is hard for people to believe, but it is true. They're rotating to the ETFs. If you think about somebody who's been in Bitcoin, and I can kind of speak to this, if you've been in Bitcoin a long time, it can wear you down. Because, you have seen the light a long time ago, and it's just such a grind. Now, when you zoom out, it's amazing how fast things develop. But in the day-to-day, it can be such a grind. And so if there's a path where you can take a lot of wealth that you've accumulated, convert it to an ETF, and then start selling covered calls, or take a collateral-based loan with a really great competitive rate, there's going to be a lot of OGs that are tired, man, and they just want things to be a little easier. So they're rotating into the ETFs too, and that's going to be a trend that continues. That looks like selling on chain. So Luke has misread this situation entirely. Of course there's additional selling. Of course, we hit 100,000 for the first time. That's amazing. People are rotating into ETFs as well, but they are on track at just the ETFs alone. None of the digital asset companies like Saylor, just the ETFs alone are on track to buy more than the supply. That's incredible. That's incredible, and it's going to make a price difference because of the scarcity factor. So I don't know how Luke misses this because, again, he's a gold bug, and this happened to the gold ETF when it launched, but we resume.
Intuitively, if I was worth 50, 100, 200, 300 billion dollars in Bitcoin, it is probably mostly in Bitcoin. I've held it for 15 years, 10 years.
Which one?
I would probably be very tied in that world. And I wouldn't sell unless there was some sort of I would start to take some off the table if I thought quantum was a risk I wanted to at least hedge somewhat.
This is his logic as to why the OG whales have been selling. Not because we hit $100,000 and they've been hodling for a decade when everybody tells them it's a waste of time, that they're destroying the environment, that it's only used by criminals, that it's never going to go anywhere, when their family laughs at them and doesn't listen to them, when they try to convince people day after day and nobody listens, and they have to watch all of this and they see the debasement trade and they still hodl even though they weren't sure. And then all of this good news comes along and we go from $60,000 to over $100,000. And he can't wrap his big bald noodle around that?
And so when I see this whale selling, I can't help but think, maybe there's something there. Given the price action I'm seeing when you're looking at gold versus Bitcoin not setting a new high against gold for the first time in its life. When I see it breaking down on various momentum bases relative to the dollar on long-term charts. Like I don't really look at the chart. Like for me, I just want to see the long-term technicals, and the long-term technicals were really breaking down about 3-4 weeks ago, 6 weeks ago.
Yeah, like when there was the massive market issue on, was that October 10th? Was that what it was? Yeah.
And so that's really where I just say, you know what? I fully concede I might be being too cute by half. And these technicals, when they broke each of the last 3 times, as emphatically as they just broke about 4 weeks ago, the median decline in Bitcoin was 65, 70% each time. And there have only been 3 triggers in 14 years, and there have been no false triggers.
It's just funny because he says he's not a chart guy, and then half of this is him looking at charts.
So for me, it's, especially given the size that it had grown to in my portfolio, it was a champagne problem, knock on wood. It was, I got something right for a change, but.
Yeah, and then you went and sold it. Because, he was never really all in, and I bet this isn't the first time he's sold either.
To me, it spoke to a need to right size it and substantially reduce positions because I just think it's going a lot lower. And I guess lastly, to tie back, why is it functioning? I've called it the last functioning smoke alarm for 5, 6, 7 years. Look, it's telling us the first half of next year is going to be ugly, right? Let's make no mistakes. Bitcoin, if this Bitcoin sell-off is not just 100% tech and quantum computing related, and forget about tech, because tech's liquidity too. If this isn't just a Bitcoin-specific quantum computing sell-off, and I don't think it is, then what Bitcoin's telling us is, sir, we go back to that BC and AD.
So he's selling because of quantum, but he doesn't think he's selling just because of quantum. He also thinks next year is going to be a disaster.
Bitcoin-specific quantum computing sell-off, and I don't think it is. Then what Bitcoin's telling us is, sir, we go back to that BC and AD of 2026. Yikes. There's a lot of, basically everything but gold and the dollar are likely to get waylaid until we get to year 0. Is what Bitcoin's saying.
And on what time horizon are you bearish Bitcoin? 1 month, 3 month, or is this a multi-year negative view you have?
Probably a function of more price than time, but there's probably price and time. In other words, look, if I woke up and Bitcoin is 40,000 and a little bit of time has passed and there's revulsion in any number of technical indices. One of the nice things about having the size following I do on X is it's a very useful indicator of sentiment. I can just, throw some chum in the water.
Wow. If he's following X sentiment, no wonder he sold. I mean, it's, like I said at the top of the show, the worst I've ever seen on X and some other places. Literally the worst. And I'm not the only one saying that. I just cannot believe that he would think that's a valid source for long-term macro investing. sure, you can go there and get some signal, but my goodness.
Having the size following I do on X it's a very useful indicator of sentiment. I can just, throw some chum in the water and the response I get is pretty informative. And then it's also going to be a reevaluation of the fundamentals, right? Of, okay, where's price? Probably some time. And then, okay, is quantum getting closer, better, what have you? And again, I'm not smart enough to figure out whether it is or not. There's a quorum of people I'm watching this is their lives. I'm going to trust what they're having to say. But that's for me really more it. For me, for at least the next several months, it's negative. Again, if it crashed tomorrow to a level where it's okay and revulsion, I could revisit that. But I don't think that's going to happen. I don't think it's going to happen that fast. Certainly not the way the last 3 cycles have gone. And I've lived through each of those. 13, I own Bitcoin. 17, I own Bitcoin. 21, I own Bitcoin. And it was like same kind of thing. It felt very similar. The reaction was very similar. I had a tickler on my calendar literally in September, like, hey, check Bitcoin. It's the 4th year. And I looked at it, it was like 120. I'm like, nah, we're fine. And so I finally only went negative at like 95,000.
Okay. So I think I'm hearing 3 reasons really when I boil it down that's driving Luke's reason for selling. And again, I have to tell you, this really was a bomb in the Bitcoin community. I think one reason is he thinks he can buy back lower potentially. So he's selling into the 4-year cycle. I think his real conviction is with gold, so he's comfortable selling a large portion of his Bitcoin stack because, well, he's going to just big brain buy back at the right magical block time after it crashes down to 40,000 or whatever he thinks, and then he'll just buy back in, I guess. But he seems to be selling because of the 4-year cycle theory, but he doesn't seem to be fully informed on the 4-year cycle theory because the way the 4-year cycle works is there has to be a blow-off top. We had no blow-off top. Going from 100,000 to 126,000 ain't it, Chief. So if you're going to call 4-year cycle, then how do you account for the fact that we hit an all-time high before the 4-year cycle kicked off with the ETFs launched, and then we never had a blow-off top? So this last cycle was completely dysfunctional and wobbly. But yeah, you're going to sell your Bitcoin stack. Okay, so kind of seems like that's reason number 1. Reason number 2, he's clearly bearish on 2026. Well, the reality is Luke has been bearish since late 2024. I don't think the market's computed for Luke since Trump came into office. Here's a clip of him in early December last year, late 2024.
Tactically, pretty much all these tariffs are going to do a couple of things. First, they're going to probably strengthen the dollar relative to foreign trading partners. That's fine, but then go back to point A, which we were just talking about, right? Which is that the dollar gets too strong, you're going to blow up the stock market, the bond market, the banks, the government. So that's sort of problem number 1. Tactically, is sort of when do we hit that tripping point? And I think the market is, in terms of where we're seeing the dollar trade, is already starting to discount. Oh, some tariffs are coming on. It's going to be good for the dollar tactically. And I think some of the volatility we've seen in equities over the last 2 weeks is also a reflection of that. But strategically, I think the market is paying basically no attention to what they're trying to do here, which is the dollar-centric system of the past 50 years requires us not to put tariffs on. And so everyone's focused on this tactical, what's the dollar going to do? And how, are we going to wail on China? And important. But don't miss the forest for the trees. Don't miss the forest for the trees. They're ending the dollar-centric system of the last 50 years if they put tariffs on. Full stop. The flows that have always worked, right? We send our factories and jobs. They send us the stuff. We send them the dollars. They send the dollars here, invest in our capital markets, lower our rates, which finances more stuff buying from there. Like what they're really saying is the economic system of the last 50 years is over.
This is why you have to separate the emotion from the signal, because even the most brilliant macro analysts can let it affect their thinking. Luke got all of that wrong. The dollar is down relative to trading partners since January of 2025. Look it up yourself. In fact, it accelerated its downward trend since March of 2025, which is right around when the tariffs went into effect. Now, that clip is over a year old, and Luke said that the tariffs would tear down the dollar system. Well, I don't see any signs of that. I think he was way, way off. Double fail. So yeah, of course he's bearish. He's been bearish since Trump got elected. Okay, fine. All right. But, own your mistakes there. And then I think third, the biggest reason Luke sold is because he believes OGs are selling because of quantum. I don't know where he got this from. It's ridiculous. And it's obviously people are taking profits at 100,000 or rotating ETFs, but fine. Let's talk about this because this is the big FUD narrative of 2026. And I'm going to play a clip from a family wealth manager who's been involved in selling Bitcoin for these OGs later in the show. I don't want to focus on that right now, and I don't want to spoil the clip, but suffice to say, that individual does not agree with Luke's take. And he's the one helping these OG whales sell. But so for now, let's stay focused on the quantum FUD. I think this is important. And while I'm not technically worried about it, I do think we should address this. And like I said, I have a lot of disappointment in Luke here because in his low effort, low IQ take on quantum, he's contributing a very loud and authoritative voice to a FUD narrative that may be Bitcoin's largest adoption blocker. And I'm sure the gold bugs are very happy about this. So let's address some of this. I'm going to play a clip from Mitchell Askew. This is, I think, from his X page or from his YouTube channel. He's from Blockwave, and he wasn't feeling great. But there's been so much quantum FUD. He while he was sick, he wanted to come out and address some basic points. And I think he nailed it.
So the first point to make here is that nobody actually knows what they're talking about. 99.9% of people, dare I say nearly 100, have no idea about quantum computing from a purely technical level. There are maybe a couple dozen people on the entire planet who are actually educated enough on computer science and have an in-depth enough understanding of the real technical details of quantum cryptography to have an informed opinion about its long-term impact as it pertains to Bitcoin and cybersecurity in general. So keep that in mind as you hear even myself talk about it, which I'm going to break down things from a less technical perspective and more from an incentive standpoint. But when you see anybody talking about quantum, understand that they are at best getting secondhand information. Rarely is anybody, actually citing a primary source, let alone can they understand the primary source in depth. So nobody really, really knows what they're talking about. We're entering very abstract territory. The second point, and this is a little more pertinent, and we have some action items here, is not every Bitcoin address will be affected in the same way or at the same time. So if quantum really is this boogeyman that is effective at hijacking certain Bitcoin and breaking certain cryptographic keys of Bitcoin held in public keys and private keys, then older addresses with less developed tech are going to be vulnerable first. And so if you have your Bitcoin in BC1 addresses with a multi-sig, you're going to be fine. It's going to be older coins that are hijacked first. And so this isn't some overnight threat. You wake up and Bitcoin went to zero because all the addresses got hacked and every Bitcoin got stolen and it's a rogue free-for-all out there. That's not going to happen. Even if quantum is the threat that people make it out to be, it's going to be a gradual waterfall-like effect, and you're going to have plenty of time to react and to upgrade to quantum-resistant addresses. Third, is Bitcoin mining still requires brute force at the end of the day. It's a proof-of-work system, and the incentives aren't changed by an upgrade in computing power or computational technology. The bottleneck for Bitcoin miners is still physical energy production. Data center infrastructure, power generation assets, land. This is the bottleneck if you want to attack Bitcoin, if you want to reorder blocks, if you want to double spend coins. And if you have all of the resources to do that, to perform a high-level attack on Bitcoin with mining, your incentive is to just profitably and honestly mine Bitcoin. Think about it. If you have billions and billions of dollars of data center assets and Bitcoin miners, you're not going to reorganize the blockchain. You're just going to mine Bitcoin honestly. Satoshi himself basically said the same thing in the white paper. I'm paraphrasing here, but he said, if someone has enough computing power to attack Bitcoin, they'd be better off mining, honestly. And the incentives for that will not change, even if quantum computing really takes off.
All right, well, coming up, I've got your boost, a production note you need to hear, some great updates, and a final clip of the week. But you can support the show just by doing what you do. If you're ready to stack sats on River, well, I've got a link in the show notes. It's one of the best ways to stack sats in the U.S. Click that link, support the show. If you're all about self-custody and you want to go to and from your own wallets, the Bitcoin Well, they're available in the U.S. and Canada. They don't host a wallet. Now, if it's time to spend some sats and you've got some on Lightning, you can go from Lightning sats to a Bitcoin gift card in just seconds. They have hundreds of different gift cards out there for like Amazon and Home Depot and all the different stores. Sats to gift card in just seconds. You can even sign in with your Lightning credentials. Now, passively stacking sats is one of the best options available to us, and Fold makes that easy just while paying bills and whatnot. The Fold card got a link to that, and if it's time to get access to your Bitcoin value without selling it, well, that's where Salt Lending comes in. You can support the show just by doing what you do. Click those links in the show notes. And we do have some boost to get into this week. Thank you, everybody. But we don't have a baller booster this week. That's okay. It's okay. We move on, though. We move on. Paranoid Coder comes in with 2,000 sats. Pew, pew, pew. Betting the 4-year cycle will never die. Oh, betting on it never did me any good, he says. Oh, okay. I read that the other way. DCA and put it away. Now, that I agreed with, Paranoid. Thank you for the boost. Nakamoto 6102 is here with 3,500 sats.
I like you. You're a hot ticket.
I don't think it is one or the other. Bitcoin halving or the 4-year cycle will impact supply, and therefore it impacts price. Liquidity is the dominant driver of price right now, in my opinion. If people or businesses don't have cash to invest, the price remains low. Thanks for the value. Nakamoto, that's it. Retail's tapped out, and businesses, small businesses who have been big buyers, they're tight right now. And so it's just big institutions, or ETFs that are buying on behalf of their customers. It is about the liquidity, isn't it? And yeah, when you're buying more than the supply anyways, I don't know definitely less supply makes a difference. So I do think having makes a difference. It's a good boost, Nakamoto. Thank you. Pabs here with 2,000 sats. Economics is a political issue, arguably the main political issue. Treating it as a technical problem separated from politics is an ideological strategy deployed with particular strength since the 1980s. You can find a great academic account of this fact in Thinking Like an Economist by Elizabeth Pop Berman. Granted, it's bigger than a partisan issue, especially when the only two alternatives are capitalism is more important than democracy versus there are equally important things, like in the U.S. Honestly, he says it's the whole West, honestly. So no need to apologize when you bring up a broader political context to discuss economic news. Keep it up. That
Make it so.
is a very enlightened way of looking at it, Pap. Thank you. Hybrid Sarcasm's here with 10,000 sats.
It's over 9,000!
I just bought the dip at 89,000. Love all the Twib content. Now, take the rest of the holidays off. Yes, sir. Yes, sir.
Fun will now commence.
That's my plan unless something crazy happens. That is my plan. Thank you for the boost. Nice to hear from you, Hybrid. Hey, Adversary 17 is here with 8,192 sats.
This is the way.
+1 for the Bitcoin Dad if he's interested. I agree. Thank you.
Use a boost.
Nice to hear from you, Adversaries. VC Avalo is here with 4,447 sats. Vinny. Oh, okay. I have a fully self-hosted Lightning address now at my own domain. I achieved this with LN bits on a public VPS, and then I tunneled to my Umbrel node on my LAN. It is a pain in the ass, but it does work, and it makes me happy. The externally reachable IP is the key. You can DM me on Nostr if you want. Sats for the holidays. Back in the paper wallet days. Oh, yeah. Yeah, I did some paper wallets. I printed out some for my niece and nephews as Bitcoin stocking stuffers. Since then, I've swept them to hardware cold wallets, but I kept sliding more sats in every year. Every year, I help their parents get a little closer to legit self-custody without my involvement. Started with me as the custodian, and my end goal is being self-sovereign with my extended family. Again, that's a great idea. Give them a little hardware starter pack, huh? The Bitcoin Uncle Club. Yes. Thank you, VC. I like that story a lot. Thank you for sharing. Retro Gears here with 5,542 sats.
Oh my God, this drawer is filled with Fruit Loops.
I am boosting from Fountain with my Albi Hub connected via Nostr Wallet Connect. Yeah, isn't that great? It's great to see Fountain add that. Read tax implications for spending CoinJar MasterCard set up in Australia. They report the tax to the tax office directly, or you can easily download transaction reports to your accountant. I also got my node set up and dialed in now with ClearNet and Tor working smooth with Bitcoin Explorer to monitor it. Ha ha! Well done, sir. I'm going to get my act together and put the compose file in GitHub and report back. It gets easier every day. Stack sats.
Make it so.
That is solid. Thank you very much for that boost. I love to hear it. Good work on the node too, Retro. Ace Ackerman's here with a row of ducks. 2,222 sats. The 4-year cycle is no longer relevant, and I think it's a positive for Bitcoin. The excessive selling by the whales is starting to make me think there is something incoming that we don't know about, regulatory or otherwise, maybe regarding custody or something. Ooh, but how would they know that we don't know? By that many of them, you think by now we'd hear something, right? You know, I could be persuaded to believe that these OGs have been around long enough that they just instinctively lean into the 4-year cycle and almost create it by will. You know what I mean? Ace, it's possible. Thank you for the boost. Kiwi Bitcoin Guides here with a row of ducks. And I think we should throw a little McDuck in there.
Quacka wacka, it's a treasure.
That's
Yippee!
No, that's fine. Yes, my nephew did complete his Sats quest. I made it easy for him by loading up a Lightning wallet and telling him about a bar where he lives that is accepting Sats. I told him he should take some friends and shout them a drink with the Sats, and offered some additional cold stored Sats as a reward once his quest was completed. Yes, the incentives work. That is very clever. I like that, Kiwi. Thank you. Gene Bean's here with a row of ducks. 3 things. Number 1, the cat mess. Boy, that is really something else. And I agree that it's just illogical. Number 2, I did move back to Core on Umbral without issue. Oh, good. Okay. He says goodbye nuts. Number 3, it's interesting testing Nostr Wallet Connect stuff with Fountain. I'm in Castomatic now, but curious if you see proper metadata from my Fountain boost. Fountain having to bridge Nostr Wallet to connect to Keysend makes stuff appear different in my wallet than I'm used to. Yes, so Gene is tipped in on the latest and greatest. So Fountain has added Nostr Wallet Connect, so you don't have to use Fountain's hosted wallet. You could use your Albi Hub. However, Nostr Wallet Connect wallets only support LN address, and LN address does not support all of the metadata necessary for boosts yet. So Fountain has created essentially a bridge that bridges LN boosts to Keysend boosts, and they banged it together really quick. It's really awesome. It's not a forever solution, but really the forever solution is getting all of the metadata stuff we needed around LN address, because that's really the direction we got to go. But we do need to know your name, the amount you sent, the episode you boosted, your message. If you're listening out there in Podcasting 2.0 and you think you could get boosts and do boost segment without people's names, the total amounts they sent, and the message, I don't know what the hell you're smoking. Your boosts are going to drop off a cliff the moment you stop giving out total amounts, names, and messages. I don't know if you don't understand how this works. Figure it out. So, yes, we need to do LN address, but yes, we've got to have working metadata. And so what Oscar has done over at Fountain is come up with a decent little bridge for the moment, but it's kind of a Fountain exclusive thing. Thanks, Gene. Good conversation. Scuffed came in with 11,245 sats. Hey!
Nuclear launch detected.
That's darn near baller, unfortunately, but I appreciate it, Scuffed. Boosting from Fountain via my Albi Hub. Hey, I love it, love it, love it. This was my number 1 issue I had with Fountain. All right. As far as the JB mining pool, tell me more. I'm all in. My single bit axe awaits. And for gifting Bitcoin this year, I'm using Riverlinks. They give you a QR code to send, or you could print out a physical piece of paper and put it in a card. That's a great point. The QR code, you could print it out, make it physical, put it in a card. Scuffed! Oh! I think you just tipped the scale for me. I hadn't even thought about that. I was totally visualizing just sending a link to their phone, which is just not as cool as being able to give them something on Christmas. Thank you, Scuffed. Great boost, too. Really appreciate that. Hodler's here with a row of ducks.
This old duck still got it.
Hey, Chris, regarding the 4-year cycle, to me, it would be great to have a couple more years to stack cheaper sats. I was thinking that before the show. I was thinking, it would be nice. Bitcoin pumping is fun, but it also means fewer sats for the stackers. Yep. He says, thanks for the value. Thank you for the boost. Thank you, everybody who boosts in, even those of you who boost below the 2,000 sat cutoff for time. Appreciate you, and I read them and save them forever, and I hold them preciously because I love them for so much. And I also really appreciate everybody who streams sats as you listen. 21 of you. Nope. 42 of you. 42 of you collectively stacked 48. Jeez, my brain is just totally broken. 42 of you collectively stacked 58,036 sats. I don't know where my head's at. I think I don't know. I think I need to lay down. When you combine that with our boosters, we stacked 119,352 sats for our final episode of the year. Now, if you'd like to send some value my way as a nice send-off for 2025, please send in a boost. You'll be kicking off my first episode in 2026. It'd be great to come into the new year with a banger boost segment. So please do boost in, share your thoughts on the biggest story in Bitcoin this year. What are your thoughts on quantum and any holiday Bitcoin stories? I would love to hear those. So let's make it a banger for the new year. And thank you everybody who supports this either with a boost or the membership through the Fountain app or, of course, Jupiter Party. Now, I want to get into a couple of things that didn't quite fit in the top of the show, but we should really be keeping an eye on. And one of these is a hanging chad over the entire market, including Bitcoin, besides the yen carry trade. And it's the concern of the private credit bubble, a term that gets used a lot, but probably has never really been fully explained. And it is indeed something to at least keep an eye on because it's one of these problems that's getting so big it could really blow up in all of our faces.
Investors and economists are warning about a piece of the financial system that could pose a risk, potentially similar in ways to the housing crash that preceded the financial crisis in 2008. It's part of what's been called the shadow banking system, the private credit market, an alternative type of lending to companies that doesn't involve traditional banks. We asked economics correspondent Paul Salman to explain how it works, what's at stake, and why alarm bells are sounding in some quarters.
Bought an aftermarket car part in recent years, good chance it came from First Brands.
First Brands was a large supplier of auto parts, so things like wiper blades, spark plugs.
Over a decade, the company borrowed heavily to grow, gobbling up 20 companies, employing 25,000 people. Until this fall, that is.
The lenders had become a bit concerned about some of the financial goings-on at the company and requested some extra information, which First Brands couldn't provide.
What happened? Went bust. And who were its lenders? Many came from the world of private credit, a part of the global financial system that's exploded in recent years and has some key players in finance rattled.
I probably shouldn't say this, but when you see one cockroach, there'll probably be more. And so everyone should be forewarned on this one.
One such roach, First Brands.
I've been saying this for probably 2 years now, that the next big crisis in the financial markets is going to be private credit.
Okay, but what exactly is private credit?
Private credit is just lending by non-banks, financial institutions like pension funds, insurance companies, sovereign wealth funds, but not going through the banking system, thus the word private. It's grown very rapidly. It's now a sizable player in the financial system.
Growing from a $40 billion market in the year 2000 to nearly $2 trillion today.
What?
The reason for that growth is that after the Great Recession, regulators realized that large financial institutions had been really exposed to making relatively risky bets without having enough of a backstop internally in the form of capital that they held that was available for the bank to draw down on in case some of those bets went sour.
Collateral. They needed to have more collateral. But the problem is a lot of times what happens with regulation, they try to address one problem And they create another problem. And now we have this private credit issue. Well, Treasury Secretary Scott Bessent, he has a fix. It's really simple. If you just loosen the rules for the big banks again, well, that business will float from private credit back to the too big to fail institutions. What could go wrong?
These 2008, 2009, 2010 financial rules were too tight. They have hamstrung the American financial system. It was time for a change. We are going to be safe, smart, and sound in terms of our deregulation, but we have to take the financial system out of the straitjacket.
Yeah.
This substantial increase in private credit, which is outside of the regulated banking system, that tells me that the regulated system is too constrained and has not been able to compete with those who aren't regulated. So we're leveling the playing field, and I believe that we can do that in a way that creates trillions of dollars in credit for this very strong economy we're going to see, and it will be non-inflationary.
Secretary, let me move on.
Let's move on ourselves, because the support for the AI pump is building. Here it comes. Get the money printer going. The White House AI and crypto czar David Sacks went on Fox Business to get the word out to everybody. The money is coming to support the AI pump in the form of, quote, hundreds of billions of dollars. No doubt, not taken from revenue, but taken from debt and printed.
There's a big build out going on right now. Hundreds of billions of dollars are going into infrastructure, and it's projected to grow to even potentially $1 trillion a year of CapEx.
$1 trillion in infrastructure.
And I think the key point here is that this is benefiting the entire economy. I think there's a little bit of a misperception that this AI boom only benefits software developers or software companies in Silicon Valley or so-called tech bros. What we're actually seeing is a huge boom that's benefiting construction workers. The Wall Street Journal had a good story on this just last week, that the wages of construction workers are up 30% because of this infrastructure build out. It's data centers, but it's also energy production. It's gas, it's fracking, it's nuclear, all the above, thanks to President Trump's policy, pro-energy policies of drill, baby, drill. So we're seeing this huge infrastructure build out.
So in other words, the government's all behind this infrastructure build out, and go spend your money in 2026. The pump support is deploying. Now, I don't play many of these days, but, this was a fun moment. Michael Saylor, he was on Sky News, and they were in the Middle East. And there's a lot of talk about some big investments over there, and the reporter seems to be assigned to the event and wants to know what's going on. Where is the fire for this smoke? And I just enjoyed this clip. That's why I wanted to play it, because the thing about Michael Saylor in this interview is he says everything with the confidence of someone who's already seen the ending.
Now, let's do this fast. Please, first answer that comes to mind, all right? Bitcoin at $1 million. Inevitable or impossible?
Inevitable.
When?
Probably within a decade.
So in 10 years. Gold in 20 years. Relic or still relevant?
I think it'll be relevant but marginalized. It won't grow as fast as Bitcoin will grow. Bitcoin will grow faster.
Who's going to be the next safe haven? Bitcoin or gold?
No, I think
because Bitcoin was once seen as safe haven.
I expect Bitcoin to emerge as the dominant digital monetary network in the world, and it is the world's reserve capital. So I think it'll grow from the $2 trillion to $20 trillion to $200 trillion over the next 20 to 30 years.
No.
I don't think gold will do that. I think that Bitcoin will be 10x bigger than gold.
All right, it is that time of the show. It's time for our final clip of the week. And this is an interesting one. I thought we should hear from somebody who's been involved with some of these OG whales selling. And I think Natalie Brunell had the same idea. She sat down with Matthew McClitnick, I think is how you might say his name. He's the head of the Bespoke Group, which is a multifamily office that advises entrepreneurs and affluent families, aka Bitcoiners, on how to manage their wealth. And some of whom are these very whales that we've been talking about that are selling recently. And he shares some insights as to why they have been selling. But also, for those humble stackers of us out there, I think he also tells a bit of a tale of caution. Some of us feel like we missed out on our moment to stack a bunch of coins for super, super cheap, and it would have totally changed our lives, or if we just hadn't sold our big stack, in my case, right? We would be to the moon rich these days. But actually, it may turn out that just patiently and humbly stacking sats is the best thing for you and your family.
And again, they've already won. They realize that they've won, and they see now a very deep demand market for it. And so now the market can absorb a lot more coins than it's ever been able to absorb before.
And barely move the price.
I mean, it might move it inside of a day, but the selling pressure is just not that great. So when we, our clients are some of the clients that are selling, but it's because they are selling for strategic purposes, and they're selling in strategic ways. Because again, these are people who have accumulated a lot of Bitcoin.
What's a lot? Like 1,000?
Yeah.
Okay.
I would say to mid hundreds to mid thousands.
Wow.
But
be so nice.
well, I mean, yes, but also be careful what you wish for,
right.
Because money doesn't solve problems; it changes them, and it makes people like me more relevant when you've got those kinds of problems, because those problems manifest not just in tax ways, but especially in the Bitcoin space. It's not unlike the startup space. If you've had a successful startup and you go from 0 to 100 million inside of a decade, that is a shocking trajectory. And everything in your life changes. Your relationships change. Sometimes your relationship with your faith or spiritual perspective, that changes. Your relationship with your community changes. Your politics often change. And your kids have seen you go from scrappy startup person or early like hardcore Bitcoiner, geeking out mining, whatever, to now they realize, wait, I get to go to the most exclusive private school in town, and we take these crazy vacations. We live in this beautiful house. Like, it wasn't always like this. And so now these families, it is like having a successful exit after you've worked really, really hard for a decade. And it's like, that is a disorienting experience.
Let's check in on the state of the network. I'm wrapping up at block height 928,322. The current U.S. price to one Bitcoin is 86,230. That puts our sats per dollar at 1,160 sats to one U.S. dollar. We're currently down 31.7% from our all-time high, $126,180, 72 days ago on October 6th, 2025. But you knew that already. China cracking down on miners means our difficulty adjustment is going downwards by 1.4%. But we have 24,548 nodes on the network. Not bad. Could use a few more over there. And Bitcoin's hash rate's still well above a zettahash, which is maybe one of the biggest stories of 2025 that no one's talking about. There's probably a few other ones out there, so boost it and tell me which ones are on your mind. But the state of the Bitcoin network, regardless of China's shenanigans or anything like that, still very, very strong. The 90-day hash rate is at 1.07 zettahash. Just absolutely bonkers. 2025 has been an incredible year for the Bitcoin network. Well, if you made it this far, go check out the links. This week in Bitcoin.show, I got more there. Things for you to follow up on. Like I said, there's a chart for every scenario. My goal is to really try to get you something that doesn't get doesn't get distracted by emotions or the politics, but really tries to focus on the signal so you can make the best decision for your stack, for you, for your future, and your family. This will be the last episode of 2025 unless something crazy happens, but it's the last planned episode of 2025. I hope you'll join me again for episode 87 in January. I'm sure I'll have a lot to talk about. I don't know if I'll be able to make it that long. That just feels impossible. If I had a predictions market for this show, the odds would be against me, but we'll see. Hopefully we get a little downtime. All right, that's it from me. Thank you so much for supporting this episode of This Week in Bitcoin. I'm going to leave you with a value for value track. And this week it is Kentucky Store by Justin Landtrip. Have a great holiday.
Well, I woke up to scattering dreams from a bitter blue light and a cookie king. I'm sinking feeling that I can't hold on everything is as it seems. Maybe I've been spending too much time alone in a river of lovers, hoping for a flood. Can't stop thinking it's never enough. You were right. You were right. You were right. If you got some love to give, come on, let me in. If you got some love these days, send a little my way. If I had my way, love through all my days. If I had my way. If I had my way through all my days. If I had my way. My way. Alright. Well, I woke up Kentucky soul with a scalpel in my hand and my heart on the floor. One firefly and 1,000 tries. I don't think I wanna try anymore. But I can't stop seeing that look in your eye with your hands in my hair. What you said was right. If you don't start somewhere, gonna go nowhere. You were right. You were right. You were right. Yeah, I got some love to give. Come on, let me in. If you got some love these days, send a song my way. Send it my way. Send it my way. Send it my way. Only one way to be sure. You got love, it's to wake it up, make it up. And I know the change is tough. I feel it in my bones, close to giving up. But I watch the tide roll in. So silly, the world's so rich, I can't help but cry. You were right. You were right. Hey, I got some love to give. Come on, let me in. Hey, I got some love these days. Gonna send it your way. If I have my way, love through all my days. If I have my way. If I have my way through all my days. If I have